Hello and welcome. Today I have with me our in-house expert Dhirendra Kumar and Siddharth Srivastava, head of ETF Products at Mirae Asset Investment Managers. We are here to talk about an interesting ETF about a fast-evolving category, the electric vehicles, the Mirae Asset Nifty EV and New Age Automotive ETF. Dhirendra, coming to you first. Automotive is one of the sectors facing massive disruption due to the onset of EVs and, more broadly environmental considerations. So how do you view it as an investment opportunity?
No, one is that, how does it change? It is a radical change in the sense that it is almost an invention of something. It is almost like internet, because automobile has become very integral part of the modern economy or modern lifestyle or, modern living. And what has happened as a result of, the emergence of Tesla and the EV is that there are many things which are going to be disrupted and it will become history and it will change forever. For example, the powertrain technology, the internal combustion engine, and that what we are used to, things become simpler. Then comes the supply chain. When I look at Delhi, the city I have grown here, and when I look at the whole ecosystem around Maruti Udyog when it started, and so what looks like an automobile company, it's actually a supply chain integration company. You'll have an air conditioning company, you have a seat company, this, that, putting all of it together. Here, that supply chain actually gets completely revamped. It has to be rethought. And what has done as a result of Tesla is that, everybody will be forced to innovate. Otherwise, you look old-fashioned, you look ugly, you don't look compatible. So, and you run the risk of, dying. You run the risk of losing your market share. You run the risk of becoming completely irrelevant. So this is almost like invention of the new automobile. And then the government bit, it is considered to be so environmental friendly that they will get all the incentives. If they will get all the incentive, the regulatory moves will be towards that. Then the financing mode, and then couple it with the evolving ecosystem of the shared mobility and other things like that. We are still quite some far off, and maybe India might be way too far off from self-driven cars. But this is something which is being talked about. So all the dimensions of the automobile industry, the regulatory, the manufacturing, the design, what we are used to is in for change. The jury is still out. We will have many things. We will have the emergence of the new industry, and this will create opportunity. This will create opportunity for new players. This will create opportunity for the old players who are significant and are, they have a modern outlook. And there are people who will actually get phased out, the people who will not, the businesses which will not be able to change with times. And the jury is still out. So that is why I think it is relevant. In times of, in times like this, you have this great opportunity and great disasters, on the anvil.
Right. That's about the opportunity bit. Now, Siddharth, moving on to you to talk about the specific fund. Can you please tell us how did you arrive at this product? What was the starting point? Was there an index you spotted or thought of EV as as a promising investment theme and got this index created?
Richa, great question. And first of all, thank you for having me on this cast. So see, Mirae Asset basically is at the forefront of thematic investing globally. So globally, we have products across artificial intelligence. In fact, you'll be surprised to know that we launched an ETF based on lithium batteries more than 10 years back. We have products on millennial consumption, on genomics, on robotics, automation, etc. So we have seen these disruptive technologies, these themes evolving globally. In fact, we launched an artificial intelligence based product on global markets and EV based product also on global markets some time back. Now in India, it's a bit tricky because, like how Dhirendra mentioned, there are lack of pure play players which you see globally, like he mentioned Tesla. But then over a period of time, we realized that government is pushing for electrification in this space significantly. You have PLI programs, incentives to the tune of 44,000 crores focused on OEMs as well as battery manufacturing. You have FAME 1, FAME 2. FAME 2 outlay is roughly around 10,000 crores. Government is actually targeting market share of EV around 30% by 2030. The reason being that they want to reduce the oil import bill. They want to obviously reduce the carbon emissions which are happening in India. They are also targeting 1 crore direct jobs, 5 crore direct plus indirect jobs, etc. So we saw that in India, the timing is right for thematic investing in this space, because for themes, it is very essential to enter at the right time. Because if you're entering late, you have already seen the growth happen, and then you're entering when the theme has become mature. So we decided to obviously construct this portfolio with the help of NSE, where the focus is on the entire value chain. Like Dhirendra was mentioning, it is important to focus on all the components of EV ecosystem, right? Everything is getting disrupted. So we reached out to NSE, asked them to create a new thematic index which will take care of the entire ecosystem. Also focuses on companies who are participating in government initiatives like PLI, FAME, etc.
All right. Now, can you please explain the mechanics of this index itself? It doesn't just have pure automobile companies. It has battery makers, related industry that has Tata Elxsi, Reliance Industries, and so on. So what types of stocks get included, and what all is a part of this index and what is not a part of it? What gets excluded? And how is the rebalancing done? So can you please throw some light on that?
In theme, it is very essential to capture the entire ecosystem, because typically the entire supply chain ecosystem participate in the growth journey of a theme. And it is, I think, more applicable in EV space. Reason being, if you look at an EV car, 35 to 50% of cost is coming from battery itself. Then you have powertrain, then you have all these cars today have so much technology behind it. So you have contribution from tech companies, you have contribution from component providers, etc. So in fact, I feel that automobile manufacturers are the sorts of the last guys who are just compiling things up, because majority of the work are being done by battery manufacturers, the powertrain creators, the guys who are making ADAS system, automation system, etc. So in EV, if you want to invest, you have to look at the entire ecosystem. Even government is, out of those 44,000 crores of PLI, 18,000 crore is just for ACC batteries. So government also realized that EV can only succeed in India if you have companies who are manufacturing batteries as well as charging stations, etc. So this is how the index is also approaching this concept. So index will consist of all companies who are creating two-wheeler, three-wheeler, four-wheeler products and who are into battery manufacturing space. Either they are manufacturing batteries, and most of them are actually have put in investment to manufacture batteries. So all of the companies in these two segments, and then top 5 companies based on market cap, which are component providers, raw material providers like chemical companies who provide chemicals for battery manufacturing, the tech guys who are providing car connectivity, ADAS systems, etc. And then 5 companies who have participated in PLI or FAME initiative. So the index is constructed to have representation from across the value chain. Right now, there are 33 companies in the portfolio. Also, to ensure diversification, automobile manufacturers will have only 40% weight on an aggregate, with top stock having an 8% cap. So your 60% weightage is towards non-automobile manufacturers. In fact, if we look at index right now, almost 25 to 27% weight, Ruchira, is towards companies which are not automobile manufacturers, and are neither auto component providers. So these 25-27% weight is towards IT, towards chemical companies, etc. And the portfolio will be reconstituted on a 6 monthly basis, and these weights will be reset on a quarterly basis. So idea is obviously to capture the entire value chain in a diversified manner so that you have representation from each of these segments, and again keep on revisiting this idea because a lot of companies are going to list also in this space in future.
Now, it is an opportunistic theme, but what is the novelty in this portfolio? What is the promise? For instance, are there any promising stocks here which one would typically not find in your AMC's mainstream equity funds? Or
First of all, it should be very clear that thematic products are more risky than a broad-based products. There's no doubt, right? Any investor who is investing in this particular product or any theme should first understand the risk which is coming with it, right? Because these themes have exposure to certain sectors, certain value chain, and they can behave very differently than the market itself. And then see if that is his or her objective to participate in that theme, right? This is not a core portfolio product. It's a satellite portfolio product, right? Where you should have a lower allocation. Now, in terms of stocks, see, this index is out of Nifty 500 itself. So you will have stocks which are already there in, let's say, large cap, mid cap, small cap, etc. But why do you invest in a bank ETF or why do you invest in an IT ETF? Because you are looking for a tactical opportunity or a long-term opportunity in that space in a focused manner. And that is what this product is bringing. This product is bringing sorts of focused exposure to companies which are participating in EV space in a single offering. And that is what this product is bringing. And as I mentioned, there will be overlap. This, for example, the ETF consists of Maruti's, Mahindras, Reliance, etc. And they will have presence in other funds, but then you won't have a fund which does that in a focused manner. So obviously, people should look at this offering. It's an interesting offering which we have come out with, but then again, they should understand the risk behind it, what it is offering. If you're asking from a current market point of view, yes, automobile sectors are at a premium, right, from an investment point of view. So your horizon should also be longer. When you talk about thematic investing, you should participate from 5 to 7 years till you see that growth journey, right? As battery manufacturing will set up, as tech companies will grow in this space, as ecosystem will evolve, then only you will see more and more impact on top line as well as bottom line of these portfolio companies.
all right. Now, Dhirendra, final word from you for the investors. What is it that the investors need to be careful of? Siddharth mentioned some of the points there, but when choosing to invest in such themes, what should be one careful about?
One is to actually have a very clear understanding that what you are getting into and what it is not. One is that it's a very promising category. It's a very promising theme. Here is the segment which is very integral part of our life, and that is poised for a big change, a massive change. And there will be winners. There will be new enterprises which will come up. And here is a fund which will be able to methodically capture all that. So it is a vehicle of targeted diversification. I disagree with, the particular standpoint that, it's not a banking fund or an IT fund because they are opportunistic in a tactical way, in a timeliness way. They are very well established. Here is something where, it'll amount to venturing into a territory where there will be winners of a scale. It is almost like this fund at this stage will have many companies, which will be like buying Infosys in 1993. Because there will be evolution, there will be creation of companies, and there will be destruction of companies. It is also not a comparable thing like IT. So I think it is a great vehicle, a very promising vehicle for targeted diversification. Make sure that you have a long-term orientation because this whole thing will not play out in next 6 months, 1 year, 2 years. It is a long-term trend. And, there will be a lot of things which will take time to happen because the supply chain, the distribution chain, the mechanics, everything will undergo, it'll take time. So have a long-term view, have a limited allocation to it, and make sure that you are aware of it. And the moment you have greater awareness, you will be stick around with it to capitalize on all the benefit that will happen. One can say that it is like buying HDFC, and as it was the first private bank to get started, and the real joy actually comes to a person who has been able to hold it through the last 25 years.
Well, that's all for today. Siddharth and Dhiren, thank you for joining in and sharing your insights. Thanks.